Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Let's see, is YouTube working? Hello, everyone. It is awesome. Happy Monday morning. It is Monday, 22nd of June. Fast approaching, of course, another one of Brian's crazy days. I guess it shouldn't surprise us. Volatility has definitely been injected into the market. Also, too, though, we comment, especially for those people interested in crypto. Man, a lot of stuff, a lot of moving parts in crypto right now. Turns out that there is a very large options expiry coming up here on Friday, and we're wondering collectively whether some price is being pushed around into that event. Could be. I do recall, and I did remember specifically that on Friday when we sort of left off into the weekend, the whole market looked like it was just getting ready to shit its pants. I mean, sorry YouTube, sorry public audience, but it just looked that way. Everything was just collapsing into the close. So the general comment was, holy crap. And then also, we're going to have to do a lot of sort of constructive work here over the next few sessions to undo a lot of the crap. So I do think to a great degree, number one, there was a potential sort of powder keg that could have gone off there in Oklahoma, of all places. Through the weekend, and it did not. And I think the world sort of breathed a collective sigh of relief that the shit didn't hit the fan. And so as a result, and we saw it sort of right out of the gate when the futures market started trading last night, and we are seeing it to a further extent today. Sort of a massive collective sigh of relief out of the entire market. So that's good. Having said that, I don't know whether we've actually broken out and are like confirming new uptrends, or still we're consolidating within the old range. We just happen to be right down at the bottom end of the range and looking like we were just about to jump out the window. So, as it stands right now, most of the conversation today is sort of just like a phew. Breadth you can see on our dashboard was pointing down. My hunch is this will probably tick back up overnight because we're seeing a bit of a bid coming back into the market, whether it be stocks or whether it be commodities or whether it be cryptocurrencies. Buyers are coming back, which is like I said, phew. Our sort of our chart deck that we like to use with you guys. We can measure that sort of, oh my God, the world's freaking outness by how our US dollar index, and really it's the propensity of, do you want to own these fiat currencies versus the US dollar, or do you just want to forget about taking the risk of owning all these crazy ass fiat things and just park yourself in T-bills? As we said, heading into the weekend, we were like, oh boy, shit's going to hit the fan. Came out basically overnight, all right, all clear. Nothing really disastrous happened. I suppose, for us to actually think about whether we've actually stopped our counter trend rally and we're actually going to start our way back down again, we probably should be watching things like 38.2 fibs. Gee whiz, what a coincidence. Today's low is basically at the 38.2. And you never know. I mean, in this crazy world, maybe we go and M out here and we start the big charge lower. But for the time being, I'm not really thinking about us taking out these lows. We are against, megaphone lows kind of stuff. I don't really like the idea of getting too overly optimistic about the market through all this COVID craziness. The way I would look at it is, as I said there just a moment ago, I get the impression that keep in mind, Mr. Trump was going to do his big Tulsa, Oklahoma conference, pep rally thing right on June 10th, which really politically would have been really bad. He delayed it a week or so, and the news reports back where coronavirus is ramping up, and even a lot of his staffers are now coming down sick. And the arena was only like half full or something like that. So it's kind of like a non-event. So, like I said, big collective sigh of relief. Now we're going to sort of probably, my general feeling of what I've shown you recently, and I still think this way, is I think we should do something along the lines of an M right in here. Then a counter trend rally, then a pullback. And you know what? This might actually be sort of that late summer, because usually the stock market actually enjoys sort of like mid to end July through August. They call it the dog days of summer. A nice sort of reprieve, and then we head into the fall, and all hell breaks loose in the fall. And of course, November, we got that big honkin' celestial event. Oh my God, end of the world, blah, blah, blah. So I do actually like this July pivot here, June, July, to actually be almost exactly the midpoint of this massive fractal for this year. And what this implies is it's going to be really choppy here over the next month or two. Freaking out, oh my God, coronaviruses, riots, and then, oh no, we're okay, and then, oh my God, and with no clear direction. And what I'm really worried about is there's going to be one more sort of push. Remember, when this goes down, it's risk on. So one more push. Barstool guys, they go and, if they do go and leverage long heavily the market, I actually think they could make a shitload of money. I could see things like Ethereum 2.0 and this old DeFi craze just getting going, and those things just rocketing. Keep in mind, Ethereum, and I was mentioning this to our site. I mean, Ethereum has yet to even do a 50% retracement of that huge down move. Bitcoin's already done well more than 50%. In fact, it went up like 61.8%. So maybe that's, and that might be very frivolous end of the summer. Fed's throwing buckets of money at the market, guaranteeing everything. And then, of course, DeFi comes out. Fed's not going to pay you anything. Hey, if I go and do my DeFi Bitcoins, I can get like 7% annual rate of return. Ooh, that sounds sexy. I can just feel the whole sort of orgy of speculation. Really, it could ramp up quite dramatically here. We'll see how it goes. Only time will tell. I don't think, like I said, we've broken out just yet here today. If anything, what I would say is today's nothing more than just a check of this big up move. If this goes and M's out, then we go through a period where US dollar is trending lower in earnest, coming back down against these trend lines. We could see the stock market and, like I said, Barstool guy embarrassing Warren Buffett and all that kind of stuff. We could see lots of that. So, hunt them W's. You got W's on volume breakouts. Oh boy, get ready. Could be some money to be made. With regard to the stock market itself, interestingly enough, I did have a sell signal that came in about middle of last week, and even today's counter trend rally has done nothing more than just bring the stock market back to that actual shorting level. Isn't that kind of funny? You'll see the news headlines. I don't know what the indexes are showing, but I'm sure they're showing huge gains. Yeah, so Dow's up 133, Nasdaq's up 91, S&P's up 18 points. So talking heads, media, all that kind of stuff. They're going to say, "Oh, look at the big bull market, rah rah rah." But what you don't realize is actually this bull did nothing more than just rally us right back into the original fail level. Like I said, on Friday, they killed this market, and it finished on its knees like the sky was about to fall. And they even, and I had warned this because I thought this was going to happen, on Sunday evening, they even, keep in mind, this is a futures market, they gapped the market lower. So at one point, first thing out of the gate, this thing was pointing substantially lower, and then, here comes a big rally. But the irony of it all is, the big rally, they just bring it back to the original breakdown point. Isn't that ironic? So that's what I mean by sort of, I haven't really got any buy signals here. All this was just these prices were pretty low here right out of the gate. And interesting too, one of the short proxies that I put on was in the semiconductor sector. And actually, one of the brokerage houses came back out and downgraded a couple of the semiconductor stocks. So, interestingly enough, the semiconductor sector is not really enjoying this counter trend rally here today. Although the sort of big name brand tech stocks, Microsoft, Amazon, that kind of stuff, they are pushing the market higher. But not the market that I actually shorted, which is interesting. But anyway, that's here and there. Interesting how we were talking about this oil trade, right? I mean, technically, that was a short location. Didn't really get the best sell signal here. I mean, the inside bar reversal would have you go short way down here, and I don't like that. Or at or below, I guess, at or above reload zones. But I would have felt comfortable hitting that 78.6 up there. And you're just, this is a trader's life. You are paid to worry. So those traders that were short even before the weekend, midweek last week, nothing's really changed here. It's just you're just sitting there underwater and just wondering whether they're going to go take out those highs or not. It hasn't been taken out yet. Having said that, I think we've talked about this before. Energy is a great leading indicator for the market. So if this thing is still pointing up and it can push higher, that leads me to believe that the stock market probably is going to work its way higher. And interestingly enough, like that sort of thesis about July, August kind of counter trend rallies, higher, summer doldrums, all that kind of stuff. I could see this, especially if we get into like August and we start to talk about hurricanes in the Gulf of Mexico and stuff like that. People start worrying about that kind of stuff and price gets bid up. Would I, first and foremost, I don't like energy anyway. If there were energy proxies, solar, natural gas, any of that kind of stuff, alternative fuels, whatever, I couldn't be a buyer here. I would definitely be waiting for reload zone tags. This isn't a market I could consider buying. But it is what it is. Interestingly enough, I'm actually a bit surprised they haven't busted the top here yet, but we'll see how it goes. Also, too, I sort of talked about this on Friday. That sort of setting up the whole damn market's just ready to collapse here. The sort of big social crisis potential never did develop. I was really worried about the gold here, and I even said on Friday that it sure looked to me like they want to take this thing up, but I was worried that they were going to gap it higher, and of course, into this wick, whole bunch of trap bulls. They just got released, right? And so they were long, and they sold into that rally right out of the gate. I put out tweets to the effect today that, hey, it looks like this bot is alive and well. And I will watch on pullbacks on this gap fill for entries. The way that I'm going to approach this is I'm still, like I said, I'm from Missouri. I just don't know whether I believe this or not. And the way I'd actually like to approach this is I want to play it through the big gold stocks. So I'm going to be watching Newmont here pretty closely over the next week or two. And you can see, as we were sort of working our way up on Newmont, you can see that there were indications of trouble. From that May peak, we've actually come off quite a bit, and you can see one low, two lows. So now if I start thinking AB equals CDs, you can see I'm developing, and that's sort of along that sort of gold bot trade. I'm developing long theses here, if that's such a word. I don't mind what I'm seeing out of price momentum. It's looking constructive. A little bit of a, a little bit of a bull div there on MACD a week or two ago. But I'm going to watch how we sort of behave here over the next week. You can clearly see just monstrous gaps. let's see how this develops. If I can get a nice third low in here, I might take a serious look at Newmont as a way to play this gold bull market, if it really is for real or not. But I'm going to be watching this really closely. And also, too, you know, I mean, this is a bit bothersome. Gold's trying to push higher, but you can see Newmont itself, it's nowhere near its highs. So, like, what's going on here? Why the disconnect, right? And if we look at the other big gold stocks, ABX, you know, this got a triple top working here. Looks like an inverted head and shoulders is coming in, which will take us back up to the triple top. Pretty good looking buy. And somebody came in here on Friday and bought a shitload of this here. But I don't know whether that's actually a new bull market. That to me just looks like more like counter trend rally kind of talk. But like I said, I'll watch the Newmont. Let's see if something develops here nice and politely. What I would ideally like to see, you know, that kind of analogy, whenever I look over in the corner, I just see a big pile of money sitting there and I just go pick it up. So what I'd like to see here is just give me a nice pullback, give me a nice little W, and away we go. Right? And if I can get those three lows, nice little polite entry, I might take a shot at it. Which, you know, is a big departure for me because I haven't been really that interested in gold for a while. So this is actually a little bit of a change of tune for me here. So let's see, where do we want to go next? You know, looking at the junior market, interesting how we're having another one of these sort of battles against the trend line here. So you saw this one resolve very quickly. Just bang, bang, bang. I'm a bull. Get out of my way. You can see here we've come right back up to this trend line here. And now we're kind of like, am I really a bull or am I a bear? So let's watch and let's see how the small caps perform relative to the big caps. This should be a pretty good tell going forward. And also, hopefully, what you're seeing here is this is a pretty important sort of line in the sand where it looks to me like something along those lines. This almost acts as like a demarcator. So if we can start Wing out and then maybe like Wyckoffing check against this level, that can actually, you know, there's an old adage they say what once was resistance tries to turn into support. Now it's back as resistance, back above. It'll probably turn into support again. So, you know, I mean, like we got the Fed guaranteeing the market here. We were joking, you know, last time the market sneezed a little bit, they came out and said, okay, we're going to buy all of the bond ETFs now. So the joke now is now the Fed's going to come out and they're going to buy all the warrants in the market. They're going to guarantee the warrants market now. Who fucking knows? I mean, you can't write better fiction than reality. Trade your setups. That's all I'm going to tell you, folks. I mean, don't get into the habit of trying to predict the future in this crazy world, that's for sure. But I could see, you know, we had a couple short bets being, you know, sort of postulated. Markets looking toppy. If those tops are all broken and the market can accept back above here, then I think we got another crazy-ass window where you're going to hear guys like Kevin banging out, well, laughing my fucking ass off all the way to the bank. I would say banging out doubles, but I think it's like 10x. It's not doubles. And actually, he was telling me of another warrant that he's in there buying. All the kids are getting all excited about. What was that one that we bought? I put a bid in. I don't know whether I got filled. Was it had a Q in it or something like that? I can't remember. Anyway, I'm sure we'll talk about it in the future. What the hell does that say? HJLI. Jesus, my eyes are getting bad. Okay, anyway, I thought this was an interesting, you know, half of why I do these videos is I really do want to make a positive difference in everybody's life. And, you know, what I would like to try and see happen is people go, yep, I learned that. Yep, oh, excellent. I journaled that. And yeah, look at that. It happened here. And sure enough, you know, what you suggested usually happens following when you see this. And that happened. So here is a fantastic example. A company's called OSS. Turns out they make parts for graphics cards and CPUs, and it turns out that they have a product that seems to be very well received, and it can dramatically increase processor performance. So that was the news that actually launched this stock higher here today. Full disclosure, of course, I'm long off the bottom. Big surprise. And it wouldn't surprise me whatsoever if I'm actually getting into banging out double levels, but that's not the point of the conversation here today. What I want you guys all to see, and this is why I really wanted to mention this, was this one bar here. You could actually infer, remember, today's the news release, right? So this is when the public participates. But you can infer when you see a candle that looks like this that somebody must have known something. This is what's called an outside, because the market opens up outside of the previous session's range. So we call this an outside upside key reversal. Why key? Because the outside upside price action engulfs the two previous candles. So in essence, this one candle here completely negated all of this selling. They just sucked it all up. And of course, if it finishes out here nice and strong like this, the rule is it's a buy one tick move higher than that candle high. So that candle high there is 202, and notice it's there 201. And then here 201, and boom. Outside upside candle just was confirmed. This bullish engulfing bar is now active. Really, really good lesson for everybody. You know, regardless of what you're going to buy or what you're going to sell, can you learn this? This is a full week module in our level 1 program, learning candlestick patterns. But an incredibly powerful pattern. Also, too, what we often see with these kind of key reversals is that this actually creates what's called a cup and handle pattern as well, where this is the cup and this is the handle. Cup and handle, that actually is the price objective up there. So, regardless of whether you're buying or selling, that's here nor there. What I really wanted to tell all you guys, because, as I said before, really what I want you guys doing is going, damn, I learned that was cool, man. Yeah, totally awesome. Totally tune into this guy's station because he actually teaches you shit. So, everybody take a screenshot of that, learn that. What does a key reversal look like? All right, heading on over to crypto and the corn. As you can tell from this chart, we actually spent a lot of time through the weekend studying the lower time frame charts. And it was so cool watching, the traders on the site. I can sell up here, I can buy here, and just sort of trading back and forth. Interesting how we had a potential sell window come up here, but no top ever really formed. I don't see any M there. Straight up, straight down, then it puts in a W and says, nope, I'm still a bull. So, interestingly enough, too, off of this A, B, C, D, you can kind of see where we're expecting price to go here. So, to be honest with you, I don't see any reason why we can't hit this 98.38 area. Seems completely doable in my eyes. And then the question ultimately is, and you can see how the war is on right now. This high, and now this high. So the question ultimately here is, at this point, do we start confirming massive 4-hour head and shoulders? That's what this chart looks like. I don't know. The jury's kind of out right now. I mean, obviously, we've come into that level. This is the POC. It needs sort of a new sort of injection of energy into here right now. And I just wonder whether you can see just so far this volume bar coming into this resistance level. It's a little bit lower than previous. This is a 4-hour chart, so this candle probably ends at the top of the hour here. Does this have enough oomph here to keep going? Tough to say, considering this is a major resistance point. My hunch is there's probably going to have to be a bit of consolidation here. It was interesting, on social media. I had sort of put out that, oh, gee whiz, I'm feeling like... And remember I'd said, the whole market finished on Friday like on its knees, like it was ready to collapse, and Bitcoin was right there. And then through the weekend, we were all sitting there with, biting nails. And I put out the tweets going, oh my God, this is total nail biter time. And then through the weekend, right, this was just a long, slow grind. And the message to the site was, look, if Bitcoin wanted to dump, it had the green light. It was basically go for it. Everything was set up. And the question ultimately was, were we going to dump or were we going to try and clean the situation up? And thank heavens, the sellers just never showed up. Phew! Like I said, the whole market was ready for Tulsa, Oklahoma to become fucking ground zero of some nuclear war. It just never happened. Phew! Thank goodness. It's interesting how you could argue from this chart that there were little indications that, if you were a bear, maybe you ought to just be cooling your jets. Because we actually had what's called a confirmed bullish divergence off this 4-hour chart come in through here. I remember yesterday through the broiler chicken shows, we were painting bearish AB equals CDs and lots of sort of bearish projections, but you can clearly see. And the most important thing out of all of this was, like I said, they had the green light to dump this thing. If they wanted to, it was a go. But the sellers just never showed up. So, the market wants to do business. So if you get a situation like this, we're painting lower highs and lower lows, momentum is pointing down, everything's pointing down, but the sellers just don't show up, well, the market at some point is going to go, look, I want to do business. I'm not just going to sit here and do nothing. If you don't want to do any business here, let's take the market to a place where we can get some business done. And sure enough, that turns out path of least resistance was back up. It is what it is, folks. I don't really like the idea of anybody saying the market will do this, the market will do that, because really nobody knows. All you can do is just trade your setups. If you have a number of reasons that get you to act, then act. If those reasons produce desirable results better than 2/3 of the time, awesome. Kevin was even telling me here today, he went through his numbers on his TRI SOF plan, and he's running at about 60-70% winners. That means, by definition, he's running 30-40% losers. But if you bang off like a 5x on your winners, can you handle that many losers? I think so. I mean, that's just money management. Ironically enough, half of what we do here is we're just statisticians, right? Make sure that your average winner is bigger than your average loser and try to be more right than you are wrong. And you don't really have any choice. You're going to be right, right? You just don't have any choice. It's just a stats game. Problem here is try to avoid, getting chicken shit and jumping out of trades that might be like 5-10% in your favor. And later on, you look at the trade and you go, God damn it, it went exactly where I thought it was going to go. 2-to-1 objectives, doubles, whatever. And those winning ideas, you actually talked yourself out of a good trade. That's what usually derails a lot of new people to trading. Anyway, long and short of it here, we're sitting basically at the point of control. If we accept above this neckline, it seems logical to me that we could work our way well above 10 Gs. Probably, big fat round number. I just don't know whether we have actually accepted above here yet or not. I think it's probably going to take a little time to get that. Actually, the most interesting of all of these right now, not so much Bitcoin to me, but Ethereum. So, along the lines of, traders got to trade. Ethereum is looking really, really nasty there heading into the weekend. It had its confirmed double tops. Everything was botting out. And then, like I said, through yesterday, we started to get a lot of anecdotal evidence that, hey, this thing, it's pointing down, it's making lower lows, but you can see momentum stop making lower lows. We actually confirmed a bullish divergence on this rally right in here. You can see the OBV started to W out. RSI started spitting out huge W's here. And of course, there's a good old bot setup. 1 lows, 2 lows, 3 lows, 4 lows. I think you can make the argument there were enough lows to work with. Moving average crosses, big breakouts on MACD, W's and RSI, OBVs breaking out, huge volume surge. Remember, market was heading down. Where the fuck are the sellers? Sellers, if you're really in control here, you gotta sell. And they just didn't. Market turns around, goes screaming up through this level. Interesting how this is a harmonic off of lower time frames, but I won't go there right now. Zipped up quickly to move stop to scratch, consolidate a bit, moved up quickly to move stop to trailing. This is why I really like this rule. So boom, you can start moving your stops up against all these lows, and ding, 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 ding. It just actually hit the bot target through our daily brief here today. But interesting how we hit the bot target and now we have stopped. Is the market overbought? Slightly. RSI readings 82. That's pretty darn overbought. You can see the beginnings of volume impetus fails. And we were watching this move through the daily brief. It's good to see that this volume bar took out that volume bar. But this volume bar is still lower than that volume bar. So it's not really an outright sell, and of course OBV doesn't have any M's or is above the moving average, so it's not really like it's a sell. But we are starting to get the warning signs that, hey, the bull is starting to sort of lose its steam here. Why? Well, because we just did hit a harmonic objective, so that seems completely natural. But also too, if we zoom out on this. And I've been sort of talking about this recently, and of course, not really the most popular thing to say around the crypto crowd. But I actually like the idea of hunting shorts on Ethereum. I just didn't really have a good level to get in at. So this morning, I actually drew up my little fib tool, my reload zone tool. And GWiz, off of the low from back there on the 15th, back up to this high, you can see the reload zone. I think I've talked to you guys before about I love candle body levels for trade locations. So notice those candle body, bang, bang, and these candle bodies, bang, bang. And also notice, too, this trend line. I mean, this is a valid trend line. The market actually confirmed the trend line there. So here we are, GWiz, right up against that trend line. So today, actually in the daily brief, we did an experiment. We're going to, and this is sort of like the value added of the daily briefs, why people really enjoy just coming and actually, we pick apart this kind of stuff through the hour videos on the site. So we're going to do a little experiment, the difference between information risk and price risk. And let's see how these go. The information risk people, they're already thinking about getting short. The price risk people, they're going to wait for a bit more information before they actually pull the trigger. So, a really interesting experiment that we're just going to run here on Ethereum right now. And I have to say, we have come right up against top end of the range. If this really is a bull, just go and break out here. I mean, what's $10 fucking? Just go and do it, right? Just do it. If we, kind of like what you saw this rally. I mean, if this is a bull, just go and break these highs. And you notice that we sort of stall here. So if we stall here, right in the reload zone, against trend lines, at ABC objectives, then I'm really, really going to get interested in shorting. But for now, I'm watching. I did like the idea of buying some puts here on Ethereum. So now, in essence, the market is basically rallied into my trade window. Now I have to really pay attention. So, like I said, that's the one that's really caught my attention in the space. Interestingly enough, Bitcoin, you can see its reload zone is, what's that, about 98.45 all the way up to 10,100. So, Bitcoin could easily jump easily. What is that? That's another $500, $600, $700 here, easily. But Ethereum has actually rallied right up into its trade location now, so I have to pay attention there. All right, so that's sort of the conversation about crypto. And, same thing with the shit perp. I don't really see any major breakouts here. And as I sort of said, I think on the Friday's video, I mean, you want to make this really simple. Is this a bull? Just go and bust out through the high here, please. All this back and forth here right now, it's not really doing a hell of a lot new. And, of course, if we do actually go and, M out here, oh boy, that's going to be trouble. Brian's going to be doing his chaos levels, Peyton levels down here, all that kind of crazy shit. So nothing's really changed here a whole hell of a lot. And if this really is a bull, just go and break the highs, and that makes it really simple for us. I think I remember we were talking. Oh yeah, if you are a bull, kind of like that Newmont, right? Just traders got to trade. Just keep hunting setups. Kevin had mentioned this before we started the daily brief here today, and this is also really good for the level 1ers who are watching this, where what we really want to do, you guys just went through learning about things like the bot and A, B, C, Ds, and we want to think about that sort of confluence idea. Can we get A, B equals C, Ds to take us into areas that we would expect? That if this really is the top, that the institutions will want the price to be in this area so that they can short this area. So here's a really good example where we have this A, B, C, D. We have 1 low, 2 lows, 3 lows, 4 lows. Jesus, this is looking pretty good. You can see the momentum is trying to turn. Actually, we even have this beautiful bullish div still valid. You can see the W's. Look at the W's trying to come in on RSI and on Willie. And I think there's actually W's trying to come in here on OBV. Not yet, right? And that's probably the missing piece here, is you'd like to see Mr. Silber to actually step up and actually buy some of his coin. But it's interesting how we just really haven't been talking about ETC too much lately. And lo and behold, it sure looks to me like there's a trader setup setting up there. So if you are an ETC bull, and I see this right across the board, if anything, I really dislike this whole Bitcoin dominance kind of talk. I think that, find your story, your fundamental driver. I'm hearing a huge amount of interest in this DeFi. I'm even hearing about them incentivizing people to stop hodling Bitcoins, deposit on these decentralized finance networks, and start earning interest. And you can actually even convert your Bitcoin into Ethereum, or I don't know, it's talking about some sort of crazy synthetic Bitcoin position you can create on Ethereum. So it almost feels like the wheels of crypto 2.0, or basically the post 2017 nonsense bull market blow off top. It almost feels like we're getting ready for the next generation here. So keep your eyes peeled, folks. As I had said earlier, I mean, Ethereum, yes, I do like the idea of a short trade. Keep in mind, Brian's got to trade, traders got to trade. But at the end of the day, let's all just keep this in mind. Probably the best to do is just go regular. A 38.2 retracement of Ethereum takes us to $595. So this asset is actually dramatically underperformed things like Bitcoin. And maybe now, you can't even see it here, but if we do start putting in weekly W's and start breaking out, maybe it is now time for Ethereum to actually start playing catch up. So keep that in mind as we're sort of bumping along here down at the bottom end of the range. Okay, everybody. I think I'll leave the presentation at that. 2020. Oh boy, what a mess, eh? I wouldn't be surprised at the end of 2020. Most of you have completely lost all faith and all interest in listening to market prognosticators who are touting good fundamental models and stuff to invest in. And probably by the end of this year, almost everybody is going to be just gambling. So I'm going to try and keep a level head here through this year. I'm going to keep trying to convey the same message day in, day out, week in, week out. Try to play with it from a position of strength, right? Work with a plan. So the plan, at least, you download the anxieties onto the plan. Try and have a good solid 3 unrelated reasons to consider risking your hard-earned money. Try to identify clearly the levels that you want to buy, so don't market buy. Enter limit orders. Clearly articulate the levels at which, if the market trades below those levels or above if you're short, you are proven wrong and you just simply walk away. Capital preservation. And then, of course, clearly articulate where you're right. And when you are proven right by the market, for heaven's sakes, pay yourself. Try to make sure your average winner is bigger than your average loser. Rinse and repeat. And that's a trader's life. So, with that said, I have no idea where the hell the market's going to go. Nobody does. I trade setups. I have lots of fun day in, day out. And, of course, if any of my assets double, you can make damn sure Brian's going to be banging out double tweets. All right, everybody, have yourselves a great day. Hang in there. All the best. PMA for the win. And bye for now.